Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, I'm going to give you an update on CLSK. They just reported earnings, so I wanted to give you my thoughts and tell you where I see it going. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel for me. We broke 1,000 subscribers, so thank you guys. It's amazing. There's a link down in the description right below for my Patreon account. Come join the family. We've got a couple spots left. I don't know, 2 or 3 for the day one squad. That's where I did it for just $1. You'll get access to the private Discord where we talk stocks, links to 5 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification, or anytime I enter a swing trade or I've got a watch list, I send that out. So if that's something you want to follow along with, come on over and join us. We'd love to have you. Real quick, to my current patrons, current subscribers, I love you guys. You have no idea how much your support means to me. I really appreciate growing the channel with you. But let's jump right in. So today, guys, we are talking about CLSK. This is CleanSpark. I have made a previous video on these guys where I went much further in depth than I'm going to go today. I will link that above right here. I just wanted to jump on and kind of do a recap, give you some updates on their earnings reports they just released, and then give you my overall thoughts on where I see the company going. Very bullish on the company overall. Think they're going to do very well. I think a lot of people are focused on the Bitcoin mining aspect of the business, but I wanted to jump in and kind of show you some of the that the energy side also has potential. So real quick, this came out, let's see, yesterday or 2 days ago. You can see here 3-month revenue increased 122% to 8.1 million year over year. And then 6-month revenue increased 124% year over year to 10.4 million. Guys, they have more than doubled their revenue for 3 consecutive years. So they are doing really well when it comes to growing. Obviously triple-digit growth looks amazing, right? 124% growth. But when you're only going from, 3 million to 8 million or whatever it is, 5 million to 10 million, it's not as impressive as if you were going from, 100 million to 200 million. But nonetheless, they're growing quickly. They're really positioning themselves well. They have 4 different acquisitions that they've made since January, and the Bitcoin acquisition was one of the ones that they made in December. So I think it's 5 acquisitions since January 2020. Or wait, excuse me, December. Yeah, so 4 acquisitions from January 2020, sorry. Okay, a couple of things here I wanted to show you guys. So it says we now have contracted backlog of executed contracts to deliver over 24.5 million in energy solutions, and with battery supplies now in position, we expect our total energy revenues to increase significantly, and we anticipate delivering on approximately 14 to 18 million of those contracts over the next 2 quarters. We further expect beyond that our fiscal quarter end December 21 to be the strongest quarter our energy business has ever experienced. So not only did they pick up the Bitcoin mining facility and are really growing that revenue, they're really starting to step it up with their overall energy side of the business. I said in my last video that expansion and branching into the residential market is going to be huge for their microgrid and energy solutions, because previously they were working with commercial, government, military bases, things like that. But they hadn't quite started doing it with residential yet. As you can see here, we are seeing the strongest growth in the residential sector, which accounted for approximately 40% of the total energy business's revenue last quarter. We expect our residential energy revenues to increase to 60 to 70% of total revenues over the next 2 quarters. The growth over the next 2 quarters is expected to be largely connected to our MVALT product line. The MVALT product lines are being released to customers in Southern California this summer, and expect to further expand that rollout by summer 2021. So guys, they are only issuing that part of their service in California. And I want to say, what did it say? Southern California, not even Northern California. and it's going to make up 60 to 70% of their total revenue. That's big. If they can start to expand that and get up to Northern and Oregon and Washington and down below them in Nevada and Utah, that could tremendously increase their top line, which is big. They are projected to do another triple-digit growth revenue into the end of 2021, and I think even for 2022. So a lot of big things coming for them. Real quick, I wanted to show you a couple things out of the investor presentation. We'll jump on, we'll look at the charts, and then we'll wrap it up. So right here, guys, these are their revenue segment margin percentages. So the software as a service is 65 to 90% margins. The system and installations and services is 25 to 60%. The hardware is only 15%, and then the Bitcoin mining is 85%. This is at a 60,000 Bitcoin price. It is a little bit below that at this date and time, but nonetheless, that is a huge margin. Guys, the two biggest parts of their business have the two biggest margins, which is great. Now, the next thing I wanted to focus on here is the Bitcoin mining. Guys, I think the reason why they picked up that Bitcoin mining facility was so important was because it was more than just a secondary revenue stream. A lot of people just kind of saw it as extra revenue, like another way to generate income. I see it as a way that, yes, generating massive income, but also if they can prove that their microgrid technology and the way that they maximize energy is super efficient and effective in cryptocurrency mining, they could expand that and sell their services to all of these other, mining companies, Mara, Riot, Hive, whatever it is, because power is one of the biggest things when you're mining crypto. As you can see here, it says difficulty rates are going up over time, and it will take more power and cost more to mine. Long term, it will be all about production and cost, and it won't matter how many miners you have if you can't put them to use in a profitable manner. In the end, it's all about access to power. Which is very true, guys. You could have all the Bitcoin miners in the world, but if your power bill is more than what you're mining, it doesn't make sense. If you don't have the power to run the rigs, it doesn't make sense. So with that being said, I mean, they are really, focusing on efficient power, right? They said in their last earnings call that they were the only company in the United States that are using 95% renewable power. Now, I'm not sure, if that's correct or not. Right here in this slide, it does show kind of the breakdown. Looks like I think they said 95% of their power is non-carbon. Only 5% of it is made with carbon. They are trying to get carbon neutral, completely, carbon neutral by, the next year or two. In 2022, they are opening up a new facility. I think if they can prove that they can run and operate these mining facilities at high efficiency, high effectiveness with low power consumption or renewable power and cutting those power costs way down, that is going to help out tremendously with not only bringing them revenue from the actual mining, but then also selling that service to these other mining facilities and then taking a residual income from that as well. Now, obviously, I don't know if that's their plan. They haven't said that yet. They have said that they are, focusing on the microgrid technology within the facility, but again, speculation. I do see that as being a big opportunity to drive more revenue. If we scroll down here, this was kind of an overview of their previous Bitcoin statistics. So in March, they were doing about 1.8 Bitcoin a day. They did a total in March of 56 Bitcoin. And then from December 10th, when they made the acquisition, through April 18th, they did 205. They have the current price here at 63,000, which it is a little bit lower than that today. It's down around 57,000. But their current electricity cost is 2 cents per kilowatt hour, which is fantastic. As you can see here, the installed capacity as of March 2021, capable of 315 petahash. I did go into petahash and exahash in my last video, so you can check that out. Exahash is more than petahash, though. They're trying to get to a point where they're at 3.215 exahash, which would be 3,200 petahash. As you can see here, this is kind of their plan. So they started at 190, trying to get all the way up to the 3.2, and then adding a additional mining facility or site in late 2021. Guys, that's going to be a big catalyst moving forward. When everybody heard about the Bitcoin mining facility that they purchased initially, that was a catalyst. It's helping them hit huge revenue guidance. They beat their last earnings by quite a number. It was like 32 cents or 22 cents they beat by. Now we'll just kind of run through this real quick. CleanSpark intends to aggressively grow its Bitcoin mining business with a focus on access to cheaper power backed by sustainable sources. And then it says they'll have 50 megawatts of total energy capacity at existing facility. Only 5% of it goes to traditional data center operations, and then the rest goes to the Bitcoin mining. The company plans to add renewables to further increase capacity and sustainability. This is just the growth of their overall hash rate, throughout, August 2021, 1.1. September 2021, 1.3. By the end of the year, they're trying to get it, 2.0, 2 exahash. And then by 2022, in September, they're trying to hit that 3.2, which would be huge. This will give you an idea of how big that will be. Guys, if they had all of their miners deployed and working right now at the 3.2, exahash rate, they would be mining 18 to 20 Bitcoins per day. At the price of 55,000, about where it's at today, that's $31 million a month. At 60 grand, that's 34 million a month, and at 65, that is $37 million a month. That is massive, guys. That's a big revenue guidance. If they add a second facility and then a third and then a fourth, and then they really prove how useful and effective their microgrid technology is at powering these facilities, like I said, it opens up a lot more doors to expand, sell that as a service, create reoccurring revenue. Like they did say in the beginning, a couple slides back, that the overall solve rate is getting harder. And so, these numbers may fluctuate a little bit, the difficulty rates, but, overall, it'll be pretty close. All right, so let's take a look at the chart. Like we saw in the last video, it really kind of came out, and, what's funny is back in June, July of 2020, it was trading at like $2. Then it ran all the way up, got up around 12, 13, came back down, and then, kind of on a downtrend a little bit, through like September, October with the correction we had then, and then really started running hot in November, December. Just massive moves. Came all the way up, hit a high of $42.60. And then since then, straight down. But I mean, it's a volatile stock. It's a growth stock. Straight up, straight down, straight up, straight down, and then just these massive gaps, like gap up, gap down. And then it's kind of been trading in this range right here ever since then. As you can see, though, I mean, it's in a downtrend. It's been in a downtrend really since beginning of January. When it started really kind of pushing downwards. It's like I said, it's really kind of moving in this consolidation range type area. It's been holding the 200-day moving average as support. In reality, though, I mean, it's really using this area as a demand area. As you can see, every time it's kind of touched this area, boom, big jumps, kind of comes down, touches the demand, boom, big pop, comes down, touches, big pop, and then now it's holding right there at that level. Now, what we really want to see is we really want to see it come up here and break above these resistance levels. It's really getting rejected within these areas. Every time it comes up, it needs to actually close above it, go up, make a higher high and a higher low, and then come back down and retest these levels. This trend line is really starting to converge with this demand zone. So you want to see it really push up through these levels, get up above it, like I said, close, really get above the moving averages to try to get back up into an uptrend. Guys, they've got a lot of catalysts coming up. They've got another earnings report not too long from now, in August, which, I mean, a couple of months for sure. But I also think as we get, towards that time of year, August, Q3, I think the overall market sentiment will kind of transition, and we will kind of continue back into a bull trend or a bull run, and it will help this stock tremendously with the growing in the Bitcoin facilities, with the expanding into the residential and the residential growing. I think they are going to continuously just smash their earnings, and the share price will reflect that. You can see here, I mean, they had a 30-cent surprise on their last earnings report from a couple of days ago, which is huge, guys. So overall, I love the stock. I think it is going to do very, very well. I think that seeing this level again up there around the $40 is absolutely doable, and I think you'll see it before the end of 2021, in my opinion. I will say this though, guys, this stock will be extremely volatile, so you have to be ready for that. The way I see this stock is I see it as a stock that you accumulate your position in, you understand it's going to be volatile, you build your conviction in it, and you dollar cost average into it as time goes on. I think that you need to hold this stock for at least a year, or at least the end of 2021. You can play the short-term volatility if you want to swing trade it or day trade it, but overall, I like the company enough. I think they've got enough potential moving forward that I do plan on holding it for, at least a year or two, depending on what happens. Obviously, if something comes out and, some ridiculous stuff happens, that changes the narrative. But overall, right now, at this point in time, I really like it, think it's going to do well, and I do plan on holding it. That's it for today, guys. Thank you so much for watching. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon. I'd love to have you. There's a couple spots left for the $1. Like the video if you get any value out of it. And let me know in the comments if you've got a price target on the stock. I'd love to hear it. But you guys go out there, have a wonderful weekend, and I'll see you in the next one. Peace.